Hello, investors. My name is Eddy.
And my name is Noah, and we want you to consider the stock Medtronic PLC in your investment portfolio. As of March 29th, Medtronic is sitting at a price of $87.14. Medtronic is a top leader in healthcare technology. Medtronic is dedicated to improving the lives of people around the world through medical innovation. Medtronic's business model includes four segments. Firstly, the cardiovascular group, which includes products like pacemakers and defibrillators. Secondly, the medical surgical group. Main products include sensors and monitors for pulse oximetry and surgical products. Thirdly, the neuroscience group, which manages products related to spinal implants and robotic guidance systems. Finally, the diabetes group, best known for the insulin pump.
The medical technology industry was recently valued at over $900 billion, with more room to grow, holding an expected compound annual growth rate (CAGR) of 5.9% through the year 2030. The medtech industry reported a conflicting year in 2023, resulting in inconsistent performance across all regions. Although these are causes for concern, the market is forecasted to stabilize at a rate where investors will continue to profit. The industry also had a good side, where companies received more FDA approvals for new innovations than any previous year, signaling an open door for positive growth in the next few years. We rated Medtronic as a buy with a target price of $123.02 due to four key reasons. First, Medtronic has had a consistent historic performance. Since its IPO in 1977, Medtronic has had an 8.1% compound annual growth rate. We can also note Medtronic's sizable market capitalization of $110 billion compared to the industry's $900 billion due to its revenue CAGR of 6.86% over the last 10 years. Second, Medtronic is continuously developing innovative products. Since April 2023, the FDA has approved 120 of Medtronic's innovations, opening the door for hospitals and insurance companies to prescribe more of Medtronic's products. Third, a primary reason for Medtronic's consistent performance is due to its solution to over 70 health conditions. By tackling various issues, Medtronic is able to mitigate risk in case one business segment is facing slow economic growth. Finally, AI is being used increasingly in research developments, better algorithms, computing greater volumes of data, and even certain products. With the continual use of AI within Medtronic, it will lead to a greater opportunities and efficiency in each business segment.
On to competitive positioning, Medtronic has a wide moat attributed to three main factors. First are the abundant number of acquisitions. To date, Medtronic has acquired 74 various companies across many sectors to strengthen their competitive position and broaden their portfolio. Secondly are the amount of resources allocated to research and development. In 2023, Medtronic pushed $2.7 billion to research and development, costing 8% of their total revenue that year. Pushing research and development at a rate much higher than the competitors, they are able to push out high-quality products as well. Lastly is the industry itself. Medtronic is in an industry where there are high barriers to entry. As a result, Medtronic focuses on the limited top competitors. Medtronic also has greater regulation in pricing their products.
According to the Porter's Five Forces, Medtronic is ahead of its competitors. The bargaining power of suppliers is 2 due to Medtronic's credibility and large buying power. The bargaining power of buyers is 2 due to Medtronic's strong brand image and the high cost to switch medical equipment from Medtronic to a competitor. The threat of new entrants is 3 due to medtech industry having high barriers to enter due to a mixture of high cost and extensive regulation from the FDA. The threat of substitutes is 3 due to Medtronic's ability to offer products with high rates of efficacy and quality and its years of credibility. The competitive rivalry is 1, with medtech containing over 6,500 medtech companies. Medtronic faces heavy competition, ranging from undercutting by competitors to pushing out the latest products. Our target price for Medtronic is $123.02, with a 41% increase from its current price. Our first valuation method is a comparable company analysis. We found 7 of Medtronic's competitors with similar discount rates and profiles. We chose 3 multiples to evaluate them: the enterprise value over revenue, the enterprise value over EBITDA, and the PE ratio, all over a range of percentiles. We then evaluated the implied share value to find the range of stock prices. It was found that Medtronic was undervalued.
We wanted another method to evaluate our company, so we chose to create a discounted cash flow. We projected the future cash flows of the investment over the next 8 years, finding terminal value, WACC rate, sum of present values of free cash flows, among others. We then calculated the enterprise value to find intrinsic value per share of $143.31, a 64.5% increase from its current price of $87.14.
To compare the results from the comparable company analysis and the discounted cash flow model, we created a football field evaluation chart. But First, we needed to create a sensitivity table to get a range of values from varying WACC percentages and terminal growth rates. By comparing the range of values to the current stock price, we deduced that Medtronic is highly undervalued, as it's under all median values. To get a more accurate target price, we average out the median implied value we received from the comparable company analysis and the discounted cash flow, resulting in a target price of $123.02.
Based on Medtronic's most recent income statement, we have seen positives surrounding certain financial metrics. We have seen a 5% growth rate in net sales on year over year. This growth was driven by higher results in 3 of their 4 segments, with cardiovascular being most notable with 6% increase, and neuroscience with 5%, and medical surgical with a 4% increase. Additionally, 4 of the 5 non-US developed regions are seeing single-digit growth, and emerging markets have single and double-digit growth rates. Showing their ability to manage costs effectively, cost of products sold and research and development stayed flat as a percentage of revenues. These results created a 17% higher earnings per share year over year, as well as a 17% increase in their net income.
There are 4 investment risks to consider. First, supply chain changes. Medtronic has closed multiple plants and centers and ending contracts with hundreds of suppliers in 2024. By reducing supplier diversity, the quality of products may decrease, innovation may lessen, and macroeconomic conditions may cause greater damage to Medtronic. Second, high leverage ratios. Medtronic had a total leverage ratio of 2.899 and a net leverage ratio of 2.643. High leverage ratios indicate difficulty in Medtronic to reach debt obligation and may even limit dividend distribution to investors in some cases. Third, cybersecurity risks. Last year, Medtronic had an issue with one of their cardiac devices where external users hacked their products. The risk in patient security and data has becoming a growing debate. If this continues, the brand image of Medtronic will decrease and, in the worst case, result in legal issues with clients and the government. Finally, geopolitical disputes. Key resources like cobalt and plastics are affected by the Ukraine conflict. The microchip shortage was first caused by conflicts between Taiwan and China, but has recently been heightened by the conflict in Israel. And rising fuel costs driven by all 3 disputes have all contributed to the growing operating costs. Medtronic has a lot of potential for the future, driven by 3 factors. First, the capitalization on emerging markets. Medtronic has begun to focus on countries with less developed medical technology. These new markets will increase sales and revenue for Medtronic. Second, Medtronic has received hundreds of products approval by the FDA. Additionally, there are efforts to enter new markets, with the latest approval in the renal denervation market. Thirdly, Medtronic has strong leadership. In 2023, Medtronic exited the unprofitable ventilator market after the leadership saw low profits and a decrease in demand. The leadership in Medtronic demonstrates their ability to minimize losses and maximize profits.
As quoted by Ken Washington, the Chief Technology and Innovation Officer at Medtronic, AI has the power to transform global health systems. We have already started to see the power of AI integrating with Medtronic operations. Medtronic is beginning to use it to improve the accuracy of their products, specifically AccuRhythm, an AI program which reduces false alerts within one of their cardiac monitors by 97.4%. Additionally, with Touch Surgery Enterprise, which is an AI program that provides surgical video and analytics from the operating room straight to the classroom. Finally, they have been used to AI to reach more communities. As we see AI develop in the coming years, the sky is the limit. Moving on to ESG considerations, Medtronic has been actively engaged in energy conservation efforts, leading to a significant reduction of greenhouse gases by 35% since 2020, with plans to further reduce it by 50% by 2025. In alignment with their commitment to global sustainability, Medtronic has undertaken 26 sustainable energy products at various on-site locations since 2011. Philanthropic activity is a top priority for Medtronic, as they donated $110 million as of 2023, alongside the contribution of over 190,000 volunteer hours by employees. In 2023, Medtronic's dedication to supplier diversity was apparent as they allocated approximately $3.5 billion through their supplier diversity program, fostering partnerships with small and diverse-owned businesses while creating jobs. Medtronic is committed to upholding high workplace standards. Medtronic has committees that oversee ESG practices alongside a code of conduct emphasizing ethical business practices. In terms of outreach, Medtronic invests significantly in training and education, allocating nearly $66 million to expand the accessibility of their products and therapies to diverse communities while also fostering employee engagement. Thank you.